All right, all you devils, how we doing today? Sam here with you. It's the 19th of November. It's kind of lunch hour for me here in Austin, and so we ran the poll this morning, and Tesla was a clear winner. Now we looked at this, I don't know, a couple weeks ago, and this is I'm so glad we picked this because there's just some good lessons to learn in here. So this is untouched from the last analysis. Well, I did a video, I can't remember what it was, but I want to say maybe 10 days, 2 weeks ago. So there's a lot to learn here. All right, so let's just dissect this. Okay, so well, let me back up here. So the premise had been we had an impulse off of our absolute low, right? And through a lot of chop here, we're seeking the 2 down here. So of course, you guys know what I'm looking for. So something between the 50 and the 618, that's our prime zone for a 2. It's just probabilities, right? It's not my preference. It's just what the math tells us. So from the swing low, swing high, we're looking for it down here. But of course, now we try and use the Elliott wave to see if we can come up with a count that would support the idea that if this is going to finish with an impulse, as we had labeled it, that there was a fairly solid chance that we had a good count in play here. We had a very technical retracement here for this potential 4. We had an algo target down here to head towards the golden zone. It would have completed this. It was a bit funky shape, but we had the A, the B in here via that. We were heading down looking for the C, prime zone, of course. Looking for the golden zone, we'd maybe come out of here in a 1, 2, 3, 4. That was the idea. Well, lo and behold, so look what we have here. So there's a couple points I want to make here. As a short, that's a perfectly valid trade. Now, if you took it short, it's likely you either stopped out or depending on where your stop is, right? So, but if you were pursuing the short here, whether you took it at the 50, I don't know what you did or didn't do, but whether you took, even if you waited and maybe if you were looking for some traction down here, I maybe used an indicator. We came up, we tested. Look, we went right into the Vegas wave, right to the 50. I mean, it is textbook. Yet it fails, right? We don't get there. Now, what happens? All right, well, so earnings just popped, but earnings didn't come until this day where we now have this gap. So the anticipation of earnings. Now, we do get a double top right here. So it would not have been unreasonable, although you'd be doing it right into earnings, right? To think, oh, I've got a double top here at the 50. Just as valid. You see it start to push off? Starts to push off, so you'd be making an earnings play. I mean, if you're entering the market a day or two before earnings, you're making an earnings play, right? I think we can probably agree on that you were looking for that move lower. There's my arrow. You were anticipating, God damn it. Trading View, not my favorite platform. Okay, here we go. Now, so down to that was the expectation. So you could have maybe thought, okay, maybe I got a little A, B, C, and maybe a shallow C, right? But I've got all this structure. I've got others. I've got this big hole in the volume profile. I'm right at a 50. I'd prefer not to be selling a 4 at the 618. Well, we would be challenging, if we were going to break as we just did, we'd be challenging the wave 1. This doesn't really look like a diagonal. So, I mean, even here, right? Aside from the timing, right, that would have been poor timing to put on a trade. I would propose to you that if you were short here and it had come back to retest this, for me, right, earnings next day, I don't know that I would have well, let me phrase it this way. If I was aggressively short, I'd have hedged it with an option or 2 or 3, so just for that possibility, right? But not to digress here, but the point being that this is a trade that is perfectly valid. The count is valid. The anticipation that we might have an entry down here, or at least be finishing, so we're looking for this to come down, and then if we got a pivot, maybe we come and take the first retrace. All very valid. That's a trade that I could support the idea here. I mean, I would propose to you that's a trade you take 100 out of 100 times. The wild card being, earnings were a couple of weeks away. But that would be the only variable here that is, as I said, kind of a wild card here. But technically, perfectly valid trade. So what happens here? Well, that's kind of why I'm glad we have this example. So clearly, I'll get there in a second. So clearly what happens as we look at this now, we can no longer put the 4 here. Right? So it seems reasonable, given how far this has moved, that if anything, And let's just take that off. Let's get you off as that breaks. We got to dig the 4 in and the 3, something like this. All right, so we can still get an impulse here. Let me take that off. It's not gorgeous, right? I mean, obviously, right? So we're kind of adjusting to what happened. So so you can use your tools here a little bit because you want to get some clarity on it. Okay, so if this was the 1, this is the 2. Well, here's a minimum requirement. So you could put the 3 here. Could you? Well, let's see. We're going to get an overlap there? We might. Let's just check that. Yeah, we would have. Okay, so you can't put it there. So the 4 cannot go here unless you're trying to play this as a diagonal. So I think you gotta live with that. Even though that's not a gorgeous, yeah, granted, we're out here on the daily. That's not a particularly gorgeous looking impulse, but let's just for the sake of, exploring it here. If this is my 2 through my 3, well, I guess we can understand here. We come to the 23. We get 2 and through first target. Again, just kind of looking for, is there any confluence here? Length of the 1 projected from that 4. Here's the 100, right? That would be your ideal. So that's pretty good. So when I find that tells me that likely I've got the count correctly identified, right? So very common for the 5th wave to have parity with the 1st wave, right? And a good Elliott count here. So that's what likely. Now we can comfortably drop our C in here, drop our 2 in here. All right, so interestingly, smack dab halfway in the middle between the 50 and the golden zone, right? So there's got to be a reason, right? It's very, very, very rare. Do we find random pivots, right? So there's, it just takes you a minute. Where is it? There it is. All right, that's 100 to the tick, by the way. Length of the 1 projected from the proposed 4. And it took a minute to find the 4, but now I get comfortable. Okay, I know what happened there. Okay. But here's the broader point I'm trying to make here. And we in the day trading room, we deal with this all day, every market, right? This is just relentless. This is just the reality you have to deal with. Now, you can feel free to disagree with me, but the evidence would be, I think in a court of law, my evidence would be overwhelming. Okay, so here's the reality of what happens. I changed the color of this just for some contrast here, but let's just do it this way. Okay, so we know that this is the dominant algorithm that let me rephrase, that we can identify in the markets, right? It's in every asset class, every time frame, every day, doesn't matter, always there. Right? Now, again, feel free to disagree with me, but I propose to you that this is how the market moves. Always, every day, and it's exactly the same going the opposite direction. Let me go back to white here so we'll have some contrast, okay? So if we're coming down here, we retrace this little 3 pivot swing. Let's get it all together. Pretty good for free drawing. Okay, all right, up, down, this little nugget right here, right? Up or down, doesn't matter, is how the market moves. Right? That's the way the algorithms, again, let me rephrase. God knows how many algorithms are in the market. This is the one we can identify. We can spot it. It leaves footprints. We can track it. We know what it did. Okay, so, it's tempting to think, and I should, let me give credit where credit is due. See, when this was originally taught to me, this was new, right? Or pardon me, let me say it this way. It was done differently, right? Back when I was really in the learning curve of my career as a trader, was working as a broker and was working with some really talented people. And then when I owned my brokerage firm, all of that, right, I had access to some really talented people. And this was taught to me slightly differently, right? There were fib numbers up here. Well, of course, we had the extension. So once we passed this pivot, right? You guys know I always talk about here internal. Once we go past this, now we have external. So it was always a question of projecting where was the appropriate fib number. Could have been 100. Could have been these would be alternate price projections, right? So we're taking this swing, projecting from this pivot, right? Those are alternating pivot projections. Well. David Halsey, who you guys I'm sure likely know, right, came up with the idea that he kind of borrowed a phrase, right? So the idea of a measured move is simply a function of taking the length of one swing and measuring for some target that would be relative to a prior swing. So the idea that a measured move is not specifically for this particular algorithmic pattern. But what he identified was the negative numbers here. So you could look at this and we could put some positive numbers down here, but his identification was that if you went to the negative, so we're just using fib numbers, negative 23.6, negative 618, right? Even you could use the negative 50 or 786. All of those were potential targets, but the dominant, what he acknowledged was that the dominant reaction for the target was at the negative 23.6. Right, so giving him full credit for that, because that was an adjustment from the way it was originally taught to me. But so I'm digressing just a little bit because I just want to be clear that, right, you know, he was the one. Let me rephrase it this way: he was the first one to write about it. Right now, he suggests that this was his discovery from a lot of screen time, and very well may be the case. But that being the point, he named it a measured move. So in his book, Trading the Measured Move, he's showing this to you as an internal to an external retracement with this as a target. All right, so all credit duly given there. Here's the reality of this, right? So you might think, oh shit, well I know that. God, Sam's shown that to me. Probably I've got over 1,000 videos, probably 2,500 times, at least. This isn't 2, 3, 4 times every video. So the evidence is pretty solid that this is an active algorithm across all markets, all time frames, all asset classes. But so you might think to yourself, well, shit, man, if I know that, I got the keys to the vault, man. That all I got to do is track that. Well, I wish that it were that easy. What happens is, right, and again, this is every day when the market's open, this is exactly what you're facing. The reality is, that's absolutely correct. This algorithm is running. We don't know who's behind it. We're never going to know who's behind it. Doesn't matter. We can identify it when it completes, not until it completes. That's when you know what you have. The challenge that we all face, given that we now have this knowledge, is that the algorithm is running on both sides. And the parties behind it do not care which side wins, because they just trade either side of it. They just trade both sides. So let me give you an example. So the problem is when this market, so let's say we get a perfect golden zone, all right, and we're coming down this way, and you're thinking to yourself, oh yes, I have identified exactly where that market is going based on that algorithm that David Halsey talked about it. I've seen the guys at Trade Devils use this. I know right where the market's going, and you very well may be right. But here's the problem. There's an algorithm on the other side, and you have no way of knowing. Well, you don't have a way of knowing, but we can use some tools to help identify, because just as you hit this golden zone, as you did here, this algorithm has that target. You follow me? So that's probably the most important thing I can teach you about trading. You do not know who's going to win. Now, we can do a few things to help stack the odds in our favor. We can do something like this, right? With golden corner pocket, we know if that pivot holds, if emphasis, right? So I always make a big point of saying emphasis, if that pivot holds, we have 80% probability of getting there. But understand that's working on both sides, right? Just because I've got a golden corner going that direction, I've got the exact same thing going this direction with 80% odds. There's the conundrum of trading right there. That's the key to the whole thing. Right now, here's the problem is we don't know who's going to win. So what do? Well, if you're this is something that we talk about a lot in the day trading room, right? Because we're dealing with this all day in every market. It's just relentless, right? In every pivot, every time you have a pivot, the algo triggers, right? So as long as we get 1, 2, 3 3 pivots, that algo's in play. Doesn't matter up, down, left, right, doesn't matter. It's always in play. They never turn it off. How about I say it that way? That's right. So it's always on. So what you have to do, and this is what we do. So one, right, as you've seen many, many times, what I try and teach you is that if we're going to go to the first target here and get the algo target here, which is our negative 23.6, right, courtesy of David Halsey. If we're going to get that, well, how could that factor into an Elliott count? Now that could just be look where we are, right? We're going to the 786. Well, that could just be a 1, 2, right? We might have just a 1, 2 going in, 3, 4, 5 going down here, right? All very possible. So we could see this algo participate here, get that target, but still this could, right, per an Elliott count, we could be heading down here. So we could have 1, 2, right? But you see the problem here is if we keep going, well, now what have I got here? Now it's much more probable that that's reversed. Right? That now what I have here is 1, 2 going the other direction, right? So now I've got 1, 2, 3, 4, 5 going this way, when it was just as valid that it could have been 1, 2, 3, 4, 5 going that way. You don't know. So how do we deal with that? Well, we look for every other variable that we can other than this, because we never know which side's going to win. Now, so we use things like, do we have a trend established? Right? Think about Tesla. That's where I got to keep my place over here. Right? Do we have a trend established? Do we have a trend established going down? We do. Do we have an Elliott count here that would be supportive of the idea? Well, if this is the B, I'm looking for 5 to finish. And the first way we drew it up, looking at this as it was coming down, didn't really look like we had well, let me open it up here. Didn't really look like we had a clear, clean, let me take that off. Like we had a clear, clean count. It looked like 1, 2, and that looked like 1, 2. Looks like that was the 3, coming back for the 4, and this looked just teed up to go. Right? So remember, we were using this as the 2. This was our 3, so we come right to the 50. Right? So we know an algorithm is going to participate here. It's a secondary pivot, but using Elliott count. Right? This is how we dovetail the Elliott into it. Right, so per that, let me get that so you can see it. Right, so 1, 2, 3, 4. Right, it's like, oh, good. I know where it's going. Right, so this makes perfect sense in that Elliott context. Well, what do we run into? Golden zone from the other side. That's the challenge of trading right there. And this could be a 1-minute chart, could be a 1-month chart, could be any asset class. It does not matter. It's the exact same thing over and over and over again. Now, we look here and we go, oh, okay, well, if that is the algo that won, right? So it was a battle between the algo that was shorting it here at the 50, looking for that, and the algo here. This algo wins, right? And not only have they've gapped through first target, and they're to the negative 100. Well, we know, right, from our Elliott Wave study that if it does that, that's a 1618, the length of the first swing. High probability that what I've got now is a 1, 2, 3. So I got to go back and undo this and change this around and go, oh, looks like, well, that must be the 3. That must be the 4, and the 5 must be there. Now, does it make sense? Well, look, I've got parity between the length of the 1 and the 5. Good, okay. Right? Maybe we didn't spot that, or we were so blinded by our anticipation, oh, it's going to go down. You just don't know. So we look here and we go, all right, well, I can back into that. So if that's my pivot, I got to work backwards. Can I get a 5 there? Yeah, I can. Can I finish the Elliott count here and not go, oh, shit, I broke every rule in Elliott to get there? Yeah, I can. Now, I mean, it's a little odd, right, that we're in between, but given the 100% APP, the length of the 1, I understand it. So what have I got going the other way? So this now becomes my 1, 2, 3, 4, 5 off of my 2. Do you see here? But what starts the whole thing is not the Elliott count. It's this. We tuck the Elliott in after the fact. Because we don't know if that's 1, 2, 3 going this way or 1, 2, 3 going that way. No way to know. Right? I mean, this looked perfectly valid from an Elliott perspective. So what happens here? We don't clear the other algo. So this is what we do. I'm sorry to be moving back and forth here. I'll make you dizzy. So this is the problem we deal with. So if you were looking for the short to go down here, here, let me take some of this off. And let me clear this up here so we don't get. Ooh, here, let's take this one off. Okay, so as this is coming down here, you know you're after a target below that would be an external retracement, right? We know we're after something beyond this pivot. That's what we're after, right? So it could be, and often we'll do it in the context of trying to stay in sync with the market geometry, looking for a target down here that would be in sync with the median lines. That's what we're anticipating, but you can't, right? Particularly in day trading, you can't take the trade short until you get through that 65. For the exact same reason of what just happened right here. You look what happened, right? So you think, oh, I got it. As soon as that reacts there, that trade's in trouble. Right, so my point being that you've got to look for that space between them. Right, so this is essentially all we do all day long in the day trading. Where is the space after I clear the gold with the 65? Do I have enough room? Well, I mean, this is an ongoing challenge, guys. I mean, don't think just because you know this, now it's going to get easy. Because the first thing you got to deal with when you get down here is a potential double bottom, which is an incredibly common phenomenon in the market. Incredibly common. So let's get this back. So first thing the challenge is you got to have enough room to get from the 65 to make it worthwhile for the potential double bottom. You got to watch for it, right? It happens all the time, right? I emphasize that because it's a weakness in my own trading, right? I'm often caught by double tops and double bottoms because I'm anticipating the break. I'm looking for this to go to its target, but often you'll see it, right? It's particularly in the stock indexes. Pivots of significance are defended, right? They know there's stops down there, or you'll see a little pop and they'll run the stops. Happened in the YM today. It was perverse, right? They ran the stops and jammed it so fast. Everybody here who was looking for the short all get stopped out, myself included. They ram it up. Happens every day, right? Because they know there's stops down there. So they pump them, right? They get to fill lower and then jam it up. So my point being that if you're trading here on this side of it and you're on this side, you don't have that much room. Let's get you off of here. You got to do the math and say, do I have enough room once we break there? First challenge is the potential double bottom, and if I can keep going and get through that, anticipating that one of the things that might happen, you might get to that double bottom and you're going to have a retrace, right? Then you might get down there. Right? If the retrace is at this angle, right, and we're maybe not getting down here, maybe we're getting second target. Maybe we're getting a true third, right, down here at the 1618. Don't know. Now, if you're going back the other direction, you're like, oh, hey, I'm a buyer here. I'm bullish Tesla or whatever the asset. So you can't take it until you get out through the other side. So sorry, guys, and because the exact same thing can happen again. Right, that would be a classic double golden zone. Right, you'd be getting a double top in the golden zone. Now that is actually more infrequent, but you do see it, right? So you'll come right back here. They will defend again because they're written to keep selling right up to the other side of the 65. So if it breaks, if you do get the break, you got just a little bit of room here before you're hitting the median line and your first algo target, right? So that's the conundrum here. Little bit of room. Now, so do you take profit there? Well, if you're day trading, you might scalp out and then let a runner go in case you get through it. Maybe you're going to get a third here. Maybe you're going to get a wave 3. Maybe you'll get up to that 1618. But you are not going to know. So the profit potential here in this trade is right there. Because there's a high probability, it may not be the pivot, but you're likely to get a reaction here at the target, right? Particularly if you're tagging it as you hit a median line. You're likely to get a reaction, right? That reaction could be short-lived, could be just a little pullback here. Maybe you're going back. So remember, this all starts over again. As soon as you hit that target, what do we have here? Exact same thing again. Now you got to wait for it again. Now you got to wait for it to come down. Are we getting to the 50, the 618, the golden zone? You got to go up again, right? And you got the exact same problem as it's going up. Here, I got to zoom in, right? So you guys get this. So what's happening is now as it comes down, you've got the exact same thing again. You got to get through this one. And you don't know, you are never going to know who's going to hold, right? Trading view, right? Looking for that one. Or maybe that turns into the 3, right? So because of that, and I was kind of railing on this yesterday, and I was trying to get you guys to not get handcuffed by the Elliott wave. The Elliott wave comes after this, not before, because it's the only way we can look for some probability that we might just have the legs to keep going. Maybe this is the start of an impulse, because if I can work the Elliott count, if I can back through the Elliott count, and go, oh, could I have a potential significant pivot here? Well, if I do, well, then I'm labeling this up going, hey, I might have a 1, 2 here. Well, this looks like that could be the 1, 2 of the 3. Now we start to put all the pieces together. But my point here is that the Elliott comes after. It's the algo that sets where we're going to start looking for the waves to come in. Do I get a 1, 2, 1, 2 up to my 3 to give me that at the median line? Right, so I'm using the geometry, all of the tools that we have to use. But what I don't do, here's what you don't want to do. Take my word for it for what it's worth. You don't want to do the Elliott first, right? That's the big problem that I see so many new traders make. They go, oh, 1, 2 must be in. Well, this is definitely going to the 3, and they forget about that other side algo, right? That's going to be there looking to push it down so that it turns into an ABC and heads down. And oh, by the way, oh, maybe that's a 1 deep 2. Now we're right. Again, not with the 1,000 variations with which that could play, but I want you to understand until you get that clarity from what the algorithm did, you can't put the wave count on yet because you don't know. Well, I'm going to take you back to our current example, right? How do you know? Get back over here. How do you know? You don't, right? So this is now equally valid here, just exactly as I've just drawn it out. So now we'll go back to real time. Here we are, right? So we no problem getting to the median line. Now we're pushing the upper parallel at the 1618, right? So we're still going as I'm recording this. So now we can look at this and go, okay, now I get the geometry of the market because now I know where I am. I know what the algorithms did down here. I get a textbook golden corner pocket here. So I know I've got high probability, but understand, guys, you didn't know until you broke the algo from the other side, right? Until this one broke. Right here, I can do this. Until this one broke, we didn't know if we were going to get there, right? Because this could have easily come right there, bumped into that golden zone, and just continued down. So we use every resource we possibly can to try and deal with that. So we can look at the oscillators. Well, what happened here as we were coming down? Well, here we're going down, 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 down. It looks like, oh, I run into the golden zone. I don't even I can't get to the oversold. I can't get to to 30 here on the RSI. All of a sudden, I've got momentum here. I'm just using an Elliott oscillator, which is just 2 moving averages, the spread being a histogram. All of a sudden, all the strength is over here. This count, the idea that this was 4 going into the 5, invalidated, and it's confirmed by everything down here. So 2 is in. What does that mean? Well, if that's the 2, and let's pull back out. If that's the 2 at this degree, well, that's mighty fucking bullish because that's not the 3. Right? That's the 1 of the 3 because the 3, right, if we're going to get a 1618 up here, is going to be a whole lot higher. If we're going to get that, right? If that's the 2, right? After that 5 we had in this very complicated, not an easy Elliott count to dig out. If that's our 2, and this is a 3 going in here relative to this 1, 2, that's the 1 of the 3. So that's now, right? So when that completes, so let's, right, just for the sake of discussion, if and when that does complete, and we don't know that it will, but if it does complete the 4 and the 5, we know where we are now. So what are we anticipating next, right? Of course, you guys know so same thing. So the whole process starts all over again. Just as we were looking for the 2 down here between the 50 and the 618, now the whole thing starts again. Now this comes off. Let's get you off. This comes off, and we're focused on this impulse. Well, first, do I get an impulse? Once I do, then I'm looking for that high probability zone, not for any other reason. Again, the probabilities, That's where I'm likely to find it. Sure, could go deeper. We know that. Shit, look at Bitcoin. Certainly could break it. Could go to the 887. Could go one tick below that pivot and still be internal. Right? That's reducing odds, right? That's not what you'd like. And the point is the problem here, if it breaks, and this is applicable both to what could happen here and what's happening in Bitcoin, and we'll go over this when we do Bitcoin on Friday. We've lost, if you come down here and you break the 65, you lose the buy side algo. Not forever, but you're going to lose it until you get another pivot and a retrace. Then you can get it on board again. Do you follow me there? Right. So if it comes down here and breaks, no buy side algo. Now, but note here, right? So, right, if it comes this way, you got to deal with him again. You got to deal with it again. So if it comes down here and we break this side, right? So I got no buy side algo, right? From this pivot, I lose the buy side. Now, if right, for whatever reason, more buyers than sellers, I get a rally and it happens to be technical and it pivots. Well, I don't know if I don't know. Is something else going on here? Are we potentially going to the target anyway? Could be. But first thing I got to do is get through this 65. So what we really want, what you'd prefer, right? And market doesn't always cooperate or give you what you'd prefer. What you'd prefer is that it come up and retrace, because now I can buy it with an algo behind my back. So I can shoot for that. So this guy here, who has I can't even see his target. Well, you get my point though. So the buyer here, the algo here, has a target up above. Then here, when I'm a buyer here, I get the algo behind me. Here, but so again, right? This guy doesn't give a shit what I want. That's just software going to stay short until either this gets broken or it gets to that target. And so then you might look at that and go, well, shit, man, if it did that, where the hell would I be in the Elliott count? Well, you got to deal with that when you get there. But what we'd like to see, the preferable path, might be something along these lines. So if we were going to come down here, so if you were thinking 1, 2, assuming, right, we got a nice 3-wave subdivision here if you're going to apply some Elliott. If I started there and that's my 2, well, if I bump my head here at the next golden zone, I'm hoping that's 1, 2. Now, all right, again, it starts again, right? Remember, it never ends. I'm doing this on the daily. I could be doing this on the 1 minute. The exact same thing starts again, right? It starts again. This guy doesn't give a shit about an Elliott count. Right, so this guy just looking to get long right there. Well, look at that. That's in the 786. I could easily, right? So this is, again, the market doesn't cooperate, doesn't care what's going to make it easier or harder for you. That could be 1, A, B, C. So now I've just got a big A, B, C. Still could be the 3. Well, this turned into quite a long video here. I didn't really start with that intention, but I'm at 30 minutes here thinking I better shorten this up. But this is really important that you guys understand this, because you do not want to buy right into that. Well, certainly the first time you're going up to it, you do not want to buy. The second time, perhaps better odds of getting through, but you certainly, right, remember, always double top, always a risk, right? I emphasize that because that's a weakness of mine. So if we get through that, now I've got a little room, but I don't know if I'm going to this target or if I'm going to this target. Shit, I could have an A, this could be the A, we could have an expanded B wave here and still come down in 5, and still that could be the 2. Do you see how we never know? You don't know. Anyone who tells you they know where the market is going is completely full of shit. Nobody knows. But you got to go into this knowing that. I don't know. You don't know. Nobody knows. So all we do is just try and play where there's room between what this algorithm's going to do. And if we get a break and we break through a target and we think, oh, maybe I've got, what else are you going to do with it? Right? So, do you see the value here is if this is 1, 2, and then this is again 1, 2, right? So we're going to go with the idea that this is our correction and we're starting yet again into a 1, 2. I don't know that I'm getting a 3 there. But if I do, well, then I'm right in sync with the market. If I get it, right, I can forecast it like I do every single day when I do a video for you guys. I can forecast it. I can draw the roadmap. That sure as hell doesn't mean that's what's going to happen. But here's what I can say. If the market starts coming down here and we are approaching this golden zone here, I am sure as hell not going to sell it. Let's get that off. I'm sure as hell not going to sell it until I get through. So if I'm bearish and I think for whatever reason, oh, we're going to just put in another double top here, I am not touching it until we get through that 65. So I've got room. Otherwise, I've got no room. I'm buying right into the algo. I don't want to buy, pardon me, in this case, sell. I don't want to sell it right there. I don't want to sell it right there. I can't really, my suggestion to you is not to sell it until we get through that, because then I've got room. And that could accelerate. But at some point, guarantee, because this is how the market moves, there's going to be a retrace. I'm not sure if I've confused or helped here. I hope that's helpful here. But my point is, you've got to get room to move, because this algo ping pong, as we call it, right, will just keep going, right? It'll just go. It never stops, right? Again, they never turn it off. Didn't mean to make that video that long, but there you go. I just kind of got on a roll here, and it's so pervasive, and this was just a perfect example of it. So do we have the 3? Well, shit, we certainly have a contender for it. 1, 2, 3, right? So if we come down, now we don't have anything yet. We don't even have the pivot here. We're still going up. Now there are going to be people saying, well, man, look at all the supply every time we get up here. Right, every time we get up here, right? So that's the person who doesn't care about an Elliott count, doesn't care about any of the shit I just showed you. He's just looking at supply and demand. Not that one's better or worse than the other one. This is what we teach you. Right? This is what has worked for me for 25 years. That's why we teach this. Right now, here, so if we're coming up into this, someone goes, oh shit, man, I don't know. I don't want to be a buyer up into that. Well, I would propose to you that that's not unreasonable, because every single time we've come up here, we've run into supply, comes back into the market. Are we getting oversold here? We're pretty hot here. I'm on a daily. That's awfully hot. Now, RSI can stay hot. It can stay hot for far longer than you would want it to if you were short. So does that mean we must retrace here? Well, I don't know about we must, but it wouldn't be surprising. So if we're going to start a retrace, what are we doing, right? So now we're just same stuff, guys, here, same, right? So we're looking for the 4. Here's our high probability zone. Can we get the 4 to the 5? No way to know. But if I've got that and I get something like this, right, you don't know, but that's certainly a trade worth considering. Why would that be worth considering? Particularly, and here, I'll finish with this point. What's the advantage of the 4 to the 5? You've got a much shorter algo to get through, but much shorter range. Right, you see here? Right, so I've got much less distance to travel. If I get through that 65, I've got more room to the target. Right, so the 4 to the 5, the odds play is better in the 4 to the 5 than trying to pick the 2, because you don't know if you're going to get that 3. Here, I've got no resistance other than when we start down, assuming, right, I don't have the pivot. When we start down, as we start back up, I got to get through that 65. Then I got room to move. Now, we could extend. Nothing says we have to stop here. But again, we come back, we use our tools. We go to our Elliott count. We go, well, that's all right. So it was perfect 100% here. Well, are we going to do that? Maybe 1272. Maybe we're going to get an extension in the 5th. Maybe we'll go 1618. But rarely, statistically, do we just fly through the 2618, the length of the 1 from the 4. It happens, but it's rare. So I wouldn't want to gamble, if you had taken that trade and you're up pushing the 2618, at the very least, that's a place to tighten your stop. Again, not that it can't do it. And shit, look at the S&P. It could do it 100 times over. But statistically, that's reckless trading to say, well, it's going to the moon. It doesn't have to go to the moon. Because at some point, it's going to start the same process all over again. All right, guys, that's a really long video. I did not mean to make it that long, but there it is. Okay, all right, so hopefully that's helpful to you guys and you draw something you can use out of that. All right, guys, talk to you later.